Hello, traders. It's Sunday, May 12th. And to all of the moms of the world, happy Mother's Day. You certainly deserve to be pampered today. I start every single one of my videos off with a review of my previous picks. I have a lot of people asking me all the time, do you have a track record? Do you have a track record? I have a track record that goes back to 2008. Look at my videos on this YouTube channel. Look at my previous videos that I've posted over the course of the last couple of months. Every single one of them has a free pick. And I'm giving it to you real time for free. And then I'm reviewing those picks in the future. So I'm not hiding behind them. If I have the occasional loser, I'm going to point it out. I think that in time, you're going to really see how effective this trading system is. And my goal is to gain your trust so that I can teach it to you. So let's take a look at our last 4 picks or so. APH, that was a pick that I highlighted about a week and a half ago. You can see how we had this nice breakout here, post earnings. This is when I got excited about it. I saw this earnings reaction initially. You had this sell-off. So the breakout to a new high failed. But the next day we had this bullish engulfing candle right back up to where the stock was post earnings. The market had been down, and you could see how the stock continued to grind higher after that initial reaction. Oftentimes, it's going to take a stock 5 to 10 days to kind of get its sea legs, and then you'll see which way it's really heading after that earnings announcement. So don't be too quick to judgment. These stocks take time. APH is a really nice stock. It is a grinder. It's the type of stock that's going to continue to grind higher once it has this strong trend established. A little bit of a bullish flag here. Beautiful. So APH was a very nice pick. MMM was a post-earnings pick that I highlighted in a video that we did during one of our Wednesday live events. Major breakouts through our automated trend lines. Let's zoom out and take a look at where they originated. That is a very long-term, very significant trend line. This is a significant trend line. These are good breaches above all the major moving averages. The stock has been in a steady downtrend for a long time, but you can see how it's formed a base with a higher low double bottom. Again, above all of the major moving averages. Now it's getting through some horizontal resistance. You always hear me talk about buying stocks that are in the upper right-hand corner of the chart. We're looking for that 45-degree angle higher. We want to buy strength. There are times when a stock is reversing a longer-term trend, and if we have evidence that this support is firm, that higher low double bottom being very, very important, and above all the major moving averages, and making horizontal breakouts, then and only then should we consider taking a long position in a stock that has been in a longer term downtrend. So we need to make sure that it's gone through this basing process. MMM looks really good. This was a post earnings breakout right here, and this is when the live event happened. I'd mentioned during the live event, I like this move longer term. Let's wait 5 to 10 days. Let's let the stock get its sea legs. Let's work off some of that supply, and then buyers will eventually step up to the plate, which they have. You can see that the stock was breaking out last Friday. MMM, I like it. I think this sets up very, very nicely for a longer term buy in the money, deep calls, and give yourself a couple of months of time, and then look for a gradual grind higher. So really nice pick. TSM. That's the pick that I highlighted during my video last Sunday. And you can see how TSM has continued to grind higher. There's your post-earnings reaction. Stock pulls back a little bit. Market was weak. You can see how the stock instantly bounced. It got right back above AVWAP-E, right back above the 50-day moving average. And so during the week, it kind of floundered around. It didn't do a whole lot, but then we had a really nice breakout through horizontal resistance on Friday. I still like TSM. It's a very strong looking stock. During the Wednesday live event, I highlighted NFLX, Netflix, as my pick of the day. So video came out here. Stock is a little bit higher. We can go into the 5-minute chart. The live event was on Wednesday. So it hasn't done a lot. In fact, actually, it's a little bit down from Wednesday's close, but I still like it. And let's go to the daily chart and I'll show you what I like. I like the fact that the stock pulled back and found support at the 100-day moving average. You can see there's the earnings announcement. So it pulls back and now it's in a very tight compression. You can see how it's gaining relative strength. It's been able to bounce off the 100-day moving average. It's above AVWAP-E, and it's filled in this earnings gap right here. And now it's above the 50-day moving average. So I believe that Netflix is going to have a fairly easy time challenging this all-time high. And that's the move that I'm looking for. What we'd want to see is a strong market backdrop. So we would want to see the market continuing to move higher, continuing to challenge its all-time high, and then we would like to see Netflix attack this all-time high right here. So we can set a GTC limit here. When we start moving higher, and I'm not suggesting that you would have to wait to get into Netflix. You can get into Netflix now as long as you have the market continuing to hold its breakout. And we're going to get into market analysis in just a second. All things considered, I like Netflix right here. I think it's going to challenge that high. Now, do we take profits at the high? Do we hang on to the position? Do we add to the position? What do we do? Well, it's going to be based on what the market does at its all-time high. As long as the market is breaking out and the market is not finding resistance, we're going to stick with the position. But if the market blows through that all-time high, we want to see Netflix do the same. So if you get that market breakout and Netflix bump, can't get through this all-time high, then you should take gains on your position and look for another stock that's able to break through horizontal resistance, technical resistance very easily. We want this to be easy with long green candles and big volume. So I like Netflix. I think that's going to be a nice pick for us as well. Let's do some market analysis. And you can see how we had this pullback in the market. Very, very strong longer term uptrend. So we get this bearish engulfing candle here. We go to the sidelines with our swing trades. We get into day trading from the short side or the long side. We take advantage of this dip and we are expecting a bounce the whole time that we get this dip. Please go back and watch my videos for the last 2 months. Watch them for the last 2 years. You'll see that everything that I'm telling you has already played out and that we've covered all this material in previous videos. I'm not just going back and recreating charts. I'm not playing Monday morning quarterback. I'm telling you what is going to happen real time before the moves take place. So, in light of my videos, you can see the last 4 picks, probably the last 12 picks have all been bullish because we've had this bounce that we're expecting. Now what we want to do, on the way down, we wanted to evaluate the strength of the dip, and now we want to evaluate the strength of the bounce. Because of this strong uptrend that we're in, we were expecting the bounce to be fairly strong and for this move to be brief and shallow. So we took starter long positions in here. The price action was kind of choppy, so we did not add to those positions right away. Because what we wanted to see was stack green candle, stack green candle, stack green candle, stack green candle, right up to the all-time high. Boom! Could not get enough stock. Had to buy everything in sight. That's the move that would have gotten us really aggressive. But that's not what we got. So we rolled with it. We had this choppy kind of back and forth rally, lots of dips, lots of retests. We've got an upward sloping trend line here, multiple touches. Okay, nice. We get this rally right up to the 50-day moving average and AVWAP-Q. Okay, this is good. We get the breakout. Beautiful. We add on the breakout. So we have a starter and now we add. Now we want to make sure that this support holds. In my last video a week ago, I said we want to see this breakout this week and we want to see follow through. We have that. Great. That is in line with being long. We have confirmation, technical confirmation of follow through, and now we are within striking distance of the all-time high at SPY 525. We've got some pretty big news coming up this week, and there have been some changes. So we had this rally that was all based on strong economic numbers, some easing in inflation, a Fed that was going to be pausing, not hiking. That was all market friendly. And so recently, we've had a slight deterioration in economic growth. We had GDP decline 2% quarter over quarter. That's substantial. We had ISM services come in contraction territory for the first time since December 22. That is a reason to be fairly cautious. I'll get into that in just a second. We've had initial jobless claims above 230,000. Jobs have been the cornerstone to economic growth. Jobs have been super, super strong. So if we start seeing these initial jobless claims come in each week, 230, 240, 250, then we have to be concerned that that unemployment report that comes out at the end of the month, that it could be soft. And so in light of all these economic, not woes, they're little speed bumps, at least right now. We've got this softer economic growth, and now the bad news is good news crowd is out in force. By the way, we did have the unemployment report a couple of weeks ago, and it showed that there were 175,000 jobs created. That was fairly light. 250,000 were expected. The good thing is that in that report, the wage component came in at a 0.2% increase. That is the largest input cost for manufacturers. So that's actually a good sign because it may show us that inflation is starting to wane a little bit. Speaking of inflation, we've got PPI and CPI coming out this week. Those will be the big reports. So what does a good number do? What does a bad number do? Well, I think that right now, what's keeping the Fed in tightening mode is inflation. And they're starting to see an economic soft patch. So they seem more willing to ease right now. In fact, during the last FOMC statement, they lowered their quantitative tightening from 60 billion per month to 25 billion per month. And not tightening is actually a form of easing. So as far as the market is concerned, it shows a willingness on the part of the Fed to take economic growth into consideration and to start easing a little bit. So it's going to continue to move that rate cut timeline forward. And that's why the market is rallying, but it is not rallying in a gangbuster manner like that, because this was all based on very, very strong economic growth, a Fed that has paused, and the potential for inflation to come in lighter than expected. Well, inflation has been very, very stubborn. So hopefully this week, if we get decent PPI and CPI numbers, we could challenge that high and blow through it. The concern here is that you can see that this rally here, choppy, chunky, gappy, mixed overlapping candles, not strong at all. Has gained a little bit of traction. Some of this traction could be from short covering. These shorts are getting squeezed just like I told you they would be. We were going to get a bounce. So you did not want to get aggressively short here. That's why the only thing we were doing on this dip was to day trade. And we were very quick to exit those trades knowing that we could get this snapback bounce at any time. So right now, anybody that's shorted in here is starting to cover, and they're taking some pretty major heat. You can see how the volume has been very light during this bounce. So, can the market continue to go higher? Yes, it can, even with the things that I've outlined, okay? Some economic weakness, but as the economic conditions continue to soften, the market is going to be looking for the Fed to soften its tone. It wants to hear that the Fed is more dovish and that they're considering some of these rate cuts. So we can get some weaker economic numbers in here. I would prefer to have them remain strong, but as long as the Fed is starting to soften their tone, yes, we could break out to a new high, and then we could continue to float higher on light volume. On that type of breakout, I'll be watching for tiny compressed candles and a horizontal compression. Then we're going to take gains on our long positions. I would need to see a big breakout to a new all-time high after that CPI report this week. Then I would add to my swing positions. And the reason that we can add, even though we're not gangbuster aggressive, and even though we don't like the market rally, technically it's not perfect, but it's good enough. That's why we added here. We added here. We'll add here. Then we'll probably be done adding. We'll have 3 legs of the position on. Our average cost will be way below a VWAP Q. So in the event that the market pokes through and then we see a long red candle off of the high, okay, well, we can lock in our gains knowing that our average cost is much lower. So that's how we're approaching it from a swing trading standpoint. If you see some really strong stocks here, you can sell out of the money bullish put spreads. That gives you lots of cushion. It is a neutral to slightly bullish strategy, and you can take advantage of time premium decay. When we have options that are relatively cheap, they have an option implied volatility below 35, then we want to go as far out in time as we can. 2 months, span earnings, buy those options that are beyond the next earnings announcement. They're going to retain their value. We'll go deep in the money. Look for a 0.7 delta. Now to do that, you're going to have to go sometimes 20 or 30 points in the money. You're going to be paying $20 or $30 for these options, especially if the stock is over $200 or $300. It's okay. We're taking a surrogate long position in the stock. This is a manner in which we can leverage that position. We're looking for that point-to-point movement with the underlying stock. So that would be the strategy. A stock like 3M, just grind, grind, grind higher. Give me a couple of months until option expiration so that I don't have to worry about rolling that position constantly. And on the flip side, for selling out of the money bullish put spreads, we want those option IVs above 35, above 40. That's going to allow us to distance ourselves from the action, and we're going to sell premium and take advantage of time decay. So that's the strategy that we're in right now. Got to be careful of the CPI. Got some long positions on. I wouldn't do anything ahead of the CPI. I'd be looking for that reaction and that breakout to a new relative high. What happens if CPI comes in negative and CPI comes in super, super hot? Well, in that case, you're going to see a retest of AV WAPQ, and then we would not be adding to our positions. So we're long below AV WAPQ. We want to see a bounce off of AV WAPQ, and we're not adding anything new. And if we start waffling around below the all-time high, we're not going to add to our swing positions. We're going to just make sure that we're able to break through that all-time high before we add. We start cracking down below AV WAPQ, we're going to exit our long positions, we'll take our gains. So tenuous price action right now, not a fantastic bounce. We've seen a little bit of selling pressure. The tone has changed from strong economic conditions to softening economic conditions that require the Fed to move forward their rate cut timeline. So if we continue to get weak economic numbers and the Fed stays steadfast and they are not dovish, then we could see another leg lower. I'm not counting on that. I'm simply telling you what you need to watch for. And we're playing the odds. That's what we're doing, is we're trying to figure out where our best opportunities lie based on the odds. And those odds are based on previous price action. This is super, 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 super strong. I can get behind that. We're waiting for a dip. This dip was not that strong. It was fairly deep, ran fairly quickly. We've had a nice bounce off of it. I would have preferred not to have it be quite this deep, rust at the 50-day, and then explode to a new all-time high. That would have been super bullish. We didn't get that. So that tells us that we can't be gonzo, super, super bullish out there like we were back in here, okay? This is when you get really aggressive with your trades. This is, okay, well, we had a fairly deep little pullback. We've bounced off of it nicely. Our best odds are to get behind this longer term trend and to look for a breakout to a new high. And we have price action that's consistent with that. But we're watching these mixed overlapping candles and we're telling ourselves we don't need to be that aggressive. Have some positions on, look for that continual confirmation. As we get it, then we can consider adding to those longer term swing positions because our average cost is way down here. So let's find a couple of stocks that look good. I'm going to keep this video a little bit on the short side. I'm just going to go into Green Royal Flush. It's my favorite swing trading search. TSM, we've covered it. Kava, CAVA, beautiful, gorgeous breakout through horizontal resistance, checks that horizontal resistance, bounces off of it. I like it. Got a little bullish flag formation right in here. Above all the major moving averages. Great relative strength. I like it. This could easily be my pick of the day. Just going to look at the volume here. We had really decent volume. Stock gapped up. It held its gains. Friday, the market really didn't do much of anything. It gapped higher and then just kind of flatlined. Let's take a look at that price action just to refresh our memory. Gap up, pulls back, fills the gap, finishes just at VWAP. So yes, a little bit higher, not a convincing breakout. Anytime we get a gap up, by the way, you have to be careful because as we get close to that major resistance, we can expect a pullback. We can expect that gap up to be challenged. And when we get gaps up, especially around the new or around a relative high, that's when we can expect to see some of this momentum build as we get a gap reversal. And oftentimes you'll see a bearish trend day. So be very, very careful on a gap up. Buying gaps up at this level is not a good idea. Wait for the first hour. Make sure that that gap is holding. Make sure that you have follow through the upside. Then you can trade the long side. What's our ideal situation? Our ideal situation is that we get a gap down. You should view that every day as, yay, Christmas came early. We're in a longer term uptrend. We're in a shorter term bounce. I got a gap down. As soon as I see support, I'm going to look for an opportunity to get long and to join that longer term uptrend and that shorter term uptrend. This is going to be a buying opportunity for me. I don't have to rush in right away. There will be opportunities during the course of the day. If you traded it early here, you would have done well. If you just waited, you could have done really well right in here also, knowing that now you had a higher low, double bottom. You've been able to watch the price action all day. This is a great entry point right here. So you didn't have to buy the open here. You could have waited to see that price action play out. Mixed overlapping candles, tiny bodied candles, pulls back just below VWAP, higher low double bottom. Great. This is where I can take a long position with confidence. So hopefully that's going to help you with the week ahead. CAVA, I like it. There's nothing not to like about this stock. I'm going to keep going through, taking a look at some charts. MU actually looks pretty good for a breakout. I like that. We're at AVWAP-E right here. EMA8, yeah, MU looks good. AXP, I love this breakout right here. This is nice. In my last video, I did pick Netflix, but I had mentioned to you that I really like financials. I had a number of financials queued up, and in fact, I think that's going to be my pick of the day. I'm going to go through a few of these here. Caterpillar getting through this downward sloping trend line, trying to anyway, could be good. It's got a little bit of gap to fill in there. So I'm going to go right down to JPM. This was a stock that I highlighted on Wednesday. It could have been my pick of the day. I wish it was my pick of the day because you could see how JPM really rallied and filled in that gap, and it's continued to move higher. So we've got a cup and handle formation here. There's kind of your cup, and there's your handle, and there's your breakout through that cup and handle. And typically what this does, and the reason that a cup and handle formation is so powerful, is because you have that higher low, double bottom, and before the stock even had a chance to come back down and test that horizontal support, way before that, buyers were anxious to take a position. So they were in there, buy, 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 buy. We don't think it's going to get anywhere near this low. We don't think it's going to get anywhere near AVWAP-E. We are buying right now, and that's what we always want to see, is that aggressive buying. Downward sloping trend line right here. It's a fairly short-term one, but it's okay. Nice long green candle, good follow through. JPM. That is your pick of the week. And we can take a look at the option IVs. 0.17. Super, super cheap. So we can go in and take a look at where these options are trading. And I would go out to July. But Pete, why do I have to buy a July option when I'm only going to be trading it for a week or two? Why don't I just buy weekly options? You aren't giving yourself any latitude for error. There's no margin for error in that at all. If you're buying out of the money options, you're exposed to time premium decay. Please don't do that. It's a great way to lose a lot of money. This is a longer term swing trading position. So if you go out to the July 19th normal expiration, you go into the 180 calls, for instance, you're going to see they're expensive as heck, dollar-wise, but not in terms of option implied volatilities. So these options are in the money by $19. Okay, stocks at $199. Options are in the money by $19. Here you're paying $21.60. So you're paying $2.60, and you're giving yourself a couple of months to be long JPM on the notion that it is going to grind higher. Could I buy the 185 calls? Okay, yes, I could buy the 185 calls. Those are offered at $17.10. Maybe you can buy them at $17, maybe even $16.90. Okay, well, those options are currently in the money by about $14. So this is what I'm talking about. Get that high delta, take the position, expect it to grind higher. You're looking for the market to break out to a new all-time high, and you're looking for it to do so with conviction. As that happens, you've got a stock that has relative strength that's also going to be testing its all-time high. And when that happens, even if the market is pecking away at the all-time high and it can't quite get through, you want to see this stock blow through that high with a long green candle, and then you want to follow through in a day or two. And if you have that, then you can even add to that position, knowing that your average cost is way the heck down here. And if you add when the stock is performing, the current price of the stock will always be above what your average cost is. And so worst case scenario, you can bail out at your average cost, scratch the trade, and not lose any money. It's not what we're looking to do, but mentally that will help you add to the position. And that's one of the biggest problems that I see novice traders have, is that they'll take a position, they'll exit the position. They'll take a position, they'll exit the position. But very rarely do they take a position and add to the position and add to the position and add to the position on confirmation. So if that sounds like you, then one of the things that you should work on is adding to positions when you have that market backdrop that you're looking for. And so right now, that's how the week is shaping up. Be mindful of the CPI number that's going to be coming out, PPI number that's coming out. We'd like to see a positive reaction to that. We'd like to break through this all-time high on the market with a nice long green candle. If we do that, JPM is going to be an excellent pick for you, and we want to see the stock do the same thing. I highlighted APH. APH looks like a great stock. TSM looks like a great stock. Netflix, keep an eye on that one. That could also be a really nice stock pick that catches fire out of nowhere. It's how these moves tend to happen, especially when the market's kind of choppy and patchy like this. That stock can lay dormant for a few days, and then boom, you get the move that you're looking for. Thanks so much, everyone, for watching this video. And again, happy Mother's Day. We will see you Wednesday for the live event.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.